Will the record number of retirees spark a recession? All right, so Wall Street Journal wrote about this, I can't remember, not too long ago, a couple weeks ago, something like that. And I have to chuckle at all these things because we've been hearing for years and years that because so many people are, baby boomers are retiring, the market's going to crash because they're all selling down their assets to fund their retirement. And that just hasn't happened. It's been the exact opposite. We've also heard this massive wealth transition as well to my generation from baby boomers. And I think some of this happened, but you're not seeing it in terms of the data from the Bureau of Labor Statistics survey of consumer finances. You're just not seeing it there. So all these thoughts that when the baby boomers do this, a massive amount of wealth is going to be finding its way downstream, just not seeing this survey of consumer finances. Just not, because you just see huge gains out of nowhere for my age group, and just not seeing it. Doesn't mean there isn't some. I mean, hell, when my grandparents died, I got a nice little inheritance that was used to buy to put down in my house. If my Grammy and Grampy did not leave me that inheritance, I would not have had I would not be able to afford the house that we bought in 2013, 12, 13. And we paid $589 for it, and I would not be able to pay for that. It's worth a hell of a lot more than that now. So thank you, Grammy and Grampy. And so that goes in my net worth. And if you see my net worth, not just mine, but if you see my generation's net worth, you're not seeing this just jump in net worth because baby boomers are dying off. You're just not seeing it. But we've heard this for decades now. There's going to be I've been in this business since 1998, and I've heard about a massive shift in wealth to baby boomers and from baby boomers for decades. And again, you're seeing some of it. Don't get me wrong. I'm not trying to say it doesn't exist, but not to the extent like trillions of brokers with the sales guys, sales managers. $1 trillion are at play. Are you going to get your share of that in assets under management? And it's such a alluring topic. Like, man, I got to get out there, because when these people inherit money, I want to be the guy they talk to. And again, it's happening. I'm not trying to say it's not happening, but not nearly the extent they say. Then we've heard about a massive decline in the stock market because all these baby boomers who are heavy in stocks are going to sell their stocks, and that's going to be a huge lack of demand, because remember what props up price is high demand or lower supply. So if we reduce the demand, in fact we say no, we reduce the demand for owning stocks and we increase the demand for selling stocks, that's going to be a massive shift in the markets. It just hasn't happened. Well, you're going to say it's because dividend buybacks. I mean, not dividend buybacks. Share buybacks are offsetting the massive liquidation of stocks that retirees are going through. Is there any evidence of that? I mean, any evidence of the mass liquidation of stocks that retirees are going through or are doing? I don't know of any. I'm not aware of any. I'd love to see it. I don't think that is. And not only that, but share buybacks, it's just dividends on steroids. I mean, so what it is, instead of having basically a 4% dividend yield, as historically the markets have had, we got basically 1.5% dividend yield. Where's that cash going? It's going to share buyback. So it's the same resources. It's just that buying back shares as opposed to paying dividends. It's the same thing here. A lot of people get really, dividends aren't paying. I do. I say the dividends aren't paying as much as they used to, so you can't rely on a 4% dividend yield or dividends providing 40% of your overall growth of your stocks. You can't do that anymore because dividends just aren't paying that. And part of the reason not paying that is because the cash that is used to pay for dividends is being used to share buybacks. And with share buybacks, what that does is reduce the supply of shares, increasing the price, supply and demand, and you're getting it now as a capital gain, the positive returns as opposed to a dividend. I know it's kind of complex, but just think it through. A company has $100 of profits. They use a 60% payout rate for dividends. They say we're not going to use a 60% payout rate anymore for dividends. We're going to use a 30% payout rate for dividends, and we're going to use 30% to buy back our shares. It's the same thing is happening, is that you don't receive a cash money in your shareholder. As a shareholder, you receive instead an increase in share price because of reducing the number of shares outstanding. That's literally what they're doing, which is better for you, frankly, because it comes as a capital gain as opposed to a dividend. The capital gain, you only receive that when you decide to sell. Now, that capital gain can also be zapped away if the company goes bankrupt or something like that. But unlike a dividend is taxed the minute you get it. A capital gain is taxed when you decide to liquidate. Unlike Sniffy Joe and stupid Kamala, who are trying to say, we're going to tax unrealized wealth. That's just stupid, dude. I mean, it's stupid to tax unrealized wealth. I'm all for a wealth tax, don't get me wrong. But I'm not not for taxing unrealized wealth, unrealized gains. That's just dumb. But I'm all for a wealth tax. For the 0.001%, absolutely, dude. People run the show, absolutely. Get a little bit more money to fund Social Security. All right, so will this cause a Great Recession? How? Well, the only way it would cause a Great Recession is if the retirees do, as I've been saying for many, many moons, they stop spending so much. Because it's not causing a great decline in share price. It's just not, dude. And that's such a silly argument to make. I mean, you can keep making it, but it hasn't come to fruition. It's a theory or hypothesis, whatever comes first. It's a speculation, and that's fine. I got no problem with people speculating, but it hasn't happened. It hasn't come to fruition. It's gone the exact opposite. So, Harry Dent and all these guys out there, the Jeremy Granthams of the world, at some point, these guys, wipe the egg off their face. So I've been wrong. The markets haven't done what I thought. They've actually gone the exact opposite. Maybe one day I'll be right, but right now I'm wrong. So what's a Great Recession? What's a recession could be caused? Well, inherently because from what? Retirees spending less. Oh! Isn't that interesting? Because consumers are 70% of GDP. We know this for a fact. Personal consumption expenditures. So consumers are 70% of our GDP. Now, I have issues with how we measure GDP. Is GDP really all that in a bag of chips? I get it, but that's what GDP is based on as we sit here today. 70% of personal consumption expenditures. So if retirees are spending less, wait a second, Josh. That right there is crazy talk. Retirees spend more as they go to retirement, or at least they spend the same. 80% of their previous expenditures adjusted for inflation each every year. So why are you saying they're going to spend less? Because that's what the evidence shows. So retirees spend less means personal consumption expenditures go down, and guess what? Voila! Could there be a recession? Of course there could be. There's always could be a recession. And the whole thing's stupid to say, oh, no recession. Of course there could be. Will it be? I don't know any more than you do. I don't know any more than you do. The facts are personal consumption expenditures are what drives economic growth. Economic growth, in terms of the economics, is that we have a positive growth of the economy. What is the economy based on with GDP? Again, there's many, many ways to look at how that measure flows. It is based significantly on the personal consumption expenditure. Could it be a recession? Yes. Could it be a recession that sinks your boat? Not necessarily. It's not. Unless these guys start selling their stocks like freaking banshees, why would they do that? Why would they do that? Well, because they're worried about the markets being frothy. Well, the markets are always trading at record highs. Always, man. I mean, markets were trading at record highs in 1975, 1985. I mean, this whole thing. So that could happen, especially when you have 4 or 5% money market accounts, but it hasn't happened. So I don't think it has anything to do with the number of retirees going to retirement, the record number of retirees going to retirement. I think, if anything, it's just a good old-fashioned business cycle. Yeah, recession could come. Will it be because on the back of consumers, retirees not spending as much? Maybe. I'm just not sure that will happen the way they predict. So anyway, I wouldn't get all too nervous about that. All right, love your thoughts. God bless.